Hello, everyone. Thank you for joining today's webinar with the topic Influence of Coronavirus on the Electricity Demand and the European Electricity Markets. My name is Alejandro Delgado, Technical Manager of AleaSoft, and I hope you are well in these difficult times. The speaker today will be Oriol Salto, our Data Analysis and Modeling Manager. Please send us any questions you have using the Q&A menu, and we will address as many as we can after the presentation that Oriol will start now. Oriol?
Good morning, everybody. Thank you, Alejandro, for your introduction. My name is Oriol Salto. I'm in charge of data analysis and data modeling in AleaSoft, and I'll be the speaker today. So the content of the webinar is divided in three main blocks: analysis of the gas and oil prices, analysis of electricity markets, and then the last part talking about future scenarios, perspectives, and forecasts. Let me make an initial warning. There is a lot of information in the slides, so I will go quite quickly through the first part of analyzing the current situation in the energy markets, and then I will focus more on the latest part about talking about the future. So afterwards, you can ask for the recording of the session, and then you can go through the video and stop when showing the data of your favorite country or your favorite commodity. So let's start with a few words about our company. AleaSoft offers forecasting services for the energy sector, and we are covering all the European energy markets. Our forecasts go from the short term for the day ahead or even minutes ahead up to the 20 or 30 years in our long-term reports. We forecast basically any variable that is needed for a company in the energy sector, mainly demand and price of energy markets, also production of renewable energy sources, demand of client portfolios, other variables needed like weather forecasts, socioeconomic data, etc. And not only spot markets, but we also offer forecasts for intraday markets, imbalances markets, or future markets. During the 20 years, more than 20 years of history of the company, some of the most important companies in the European energy sector are being our clients. We have clients, basically any player in the energy sector, companies producing electricity, companies buying electricity, system operators or distributors of energy, and also people investing in in generating plants like banks, investment funds, etc. Our forecasts are based in Alea model. It's an hybrid technology developed by AleaSoft specifically for the forecast of the energy sectors, and combining different techniques, we can outperform every of each the components of the model. The three main characteristics that we like to explain about our technology is that it's scientifically based. So it's a methodology that is based on scientific analysis and processes. The forecasts that we create are consistent over time, are robust, and keep consistency over the time. And it's the best that we can say is that this technology has been used for more than 20 years. Well, we started in the Iberian electricity markets, but right now it is used in most of the European electricity and energy markets. It is a model that is has a statistical base. It has a lot of advantages using statistical models, and it combines classical statistic techniques like progression or Box-Jenkins, econometrics, etc., with more innovative techniques like artificial intelligence using neural networks and machine learning techniques. everybody, by now everybody knows this new coronavirus that is causing a pandemic throughout the world. It can be transmitted in short distances or contacting contaminated by touching contaminated surfaces. So the basic recommendation are wash your hands, wear a mask, and keep the social distance. And governments are taking action in order to avoid the spread of the pandemic, to avoid basically collapsing all the public health services. And measures are basically directed to keep people apart so the virus and the infection disease cannot be transmitted. So the measures are general lockdowns, closing of public gathering areas, prohibiting mass events, demonstrations, sporting events, and also closing schools and universities. So keep people apart and avoid people moving around in order to stop spreading the virus and the pandemic. So obviously, these measures has an impact on the economic activity, on the commercial activity, and obviously this has an impact in the energy demand, electricity demand, fuel demand, oil demand, and also obviously in the price of the markets. And we will start seeing how this where we are now, what's the current situation for the fuels and CO2 emission rights prices. Let's start with the oil. Let's put into some historical perspective where are we now with the Brent oil price. And what we see is that right now we are at the lowest level of prices of the last 15 years. If we zoom in these last 15 years, we can see that it was just at the beginning of March when we see a sharp drop in the oil prices, and this was as I said at the beginning of March, and was due to the end of the OPEC agreement to reduce the production and keep the price level. So once if we combine this with the decrease in the global oil demand due to this crisis that started in China, and we know that China is a huge consumer of oil. So combining all this, what we had is a drop in the prices. At the beginning of this week, we had a new agreement, so we start seeing we're gonna start seeing some recovering in the price. At the end, the oil price is conditioned always by the supply. That is what are these international agreements trying to keep in order to keep the level of prices. So at some point, obviously the price will start recovering. Maybe we start seeing it. For the gas price, what we see is that we are also at the lowest price of the last 15 years, at least. So looking at the last years, if we exclude these price spikes, what we see is that from the highest price that were reached around September 2018, since then there's been a decreasing in the price, and we are getting now at the lowest levels. So keep in mind this this behavior. So highest prices in September 2018, and then a decreasing trend since then, because this is exactly the same behavior that we will see in the price of the electricity markets, because the gas price is the main, or one of the main drivers of the price in the electricity markets. If we look at another European reference gas, like it's the British NBP, we see exactly the same behavior. In the case of the CO2 emission rights, what we see is that since the prices start increasing in 2018, they has been at the level of 25 euros per ton, the highest price of the last years. And in this case, what we see that in the last weeks, there is also an important drop in the prices. This was just in the middle of March when when the European crisis, let's say the European part of this global crisis just started, is when European governments start enforcing general lockdowns. So this was kind of panic reaction in the face of a huge uncertainty that we had at that moment. So we are also starting to see some recovery in the price, and we are close to get at the previous levels. So also it's important to keep that behavior in mind, because this is exactly the same behavior that we will see in the futures of electricity prices, but because they are all of them very correlated. Now we are going to see how what's the current situation in the electricity market, price and demand for several European countries. As I said, there is a lot of information. I will maybe go quickly through all the countries that I want to show you, but let me tell you that we have a tool developed in our in our website where you can go. I'll show you the live version of it. It is updated every day, and there you can find it's an observatory of energy markets, and you can find several countries. There are more to come, and for every market you can see the evolution of the demand for the last weeks, and it's hourly evolution. Also, it's total daily evolution for the last 4 weeks, and also the total sum for the week, and the same for the prices. So the evolution of hourly prices of the last week, the base prices, and the average of the week. You have this for several countries. There are more to come. And it's useful because you can look at them every day, and they are updated regularly. So now let me go back to my slides. So we will pay some attention to Italy, because it's the first country that enforced a general lockdown, and so is the one that is that has a longer history of how the demand and price is behaving in this during this crisis. Looking at the demand, what we can see is that the demand levels that we are having these last weeks are at the lowest levels of the last 15 years. So obviously it is a huge impact on the demand, because there is a general lockdown in the whole country. And looking at the evolution of the demand for the last weeks, you can see that every week the demand is getting lower and lower, and in the last 2 or 3 weeks we have reached the bottom of the lowest possible demand. If we look at the prices, what we see, as I said before, you can see that we are also at very low levels of prices, but you can see exactly the same behavior as the gas markets. We had high prices in 2018, and since then prices are going down and reaching the actual levels. So here we can see how the gas prices are a main driver of the electricity market prices. And seeing the evolution of the last weeks, we can see as we have how the price has been slightly decreasing during the last weeks. Spain is also another country where the effect of the pandemic is more visible. You can see that right now we are well, for the last 15 years, we are at the absolute minimum of the demand. In fact, these demand levels are back 2004, 2003. So So it's a quite extreme situation. As in the case on Italy, we see that week by week the demand was getting lower. And in the price, we see exactly the same pattern that we see in the gas price market and the Italian electricity market. So as I said, I will go quite quickly because basically we can see the same behavior in most of the countries. France has a slightly less severe, slightly less strict lockdown, so the decrease in the demand is not so visible. Germany is another interesting case because they have no enforced lockdown. There is a recommendation for self-isolation, but there is no enforced lockdown. So there is a decrease in the demand because their economy is also impacted by the global crisis, but there is not, but it's not so visible like in other countries. And also in the United Kingdom, where we also see an important decrease in the demand and the similar behavior of the market electricity prices than the other countries. And here you can see a summary of the drop in the demand for all the European countries, or most of the European countries. In Spain and Italy are the ones that enforced the most strict lockdowns, and it is where the demand has dropped larger. As I said, France with a slightly less strict lockdown also experienced an important decrease, and Germany, that has no enforced lockdown, also has an important decrease on the demand. And this is because demand it's not also influenced by the economic activity, but also for the temperatures. And in the case of Germany, most of this decrease in the demand is due to the increase of the temperature. So it's important to notice that there are a lot of factors that convolute at the when trying to describe the the behavior of the demand. So just to have a picture that not everything that we see can be directly due to the impact of the pandemic. Okay, and moving to the next part, we will try to go a little slower from here. Let's see what are the possible ways that the markets can recover, or that the economy can recover from this crisis. Let's have some historical perspective. Let's see how we did with the last crisis from 2008. In 2008, well, 2009 was the first. The crisis started in 2008. 2009 was the first year with consequences. Let's say we see that the GDP of the countries decreased around 3%, 4%, 5%, depending on the country. And since then, there were countries like France, Germany, UK, and others that had almost an instant recovery. It took them 1, 2, 3 years at the most to recover the previous levels of GDP. And since then the GDP keep growing at the similar level as it did before 2008. There are other countries like Spain that it took them nearly 10 years, 8 years or something like that, in order to recover previous levels of GDP. And there are other countries like Italy that never recovered to the previous levels. For the behavior of the demand of electricity, what we see is that in 2009, due to this crisis, the demand dropped in most of the countries. The drop was around 5%, more or less, larger in some countries and less in other countries. And since then, every country followed its own path to the recovery. So keep in mind these numbers: 3, 4, 5% drop in GDP, around 5% drop in demand. What are the possible scenarios that we can have in a crisis recovery? We can have a V-shaped scenario this is what we see in 2008 in France and Germany, where the recovery is basically instantaneous. You have a drop in a given year, and the next year you are basically fully recovered. So looking at the present crisis, let's say that we will, in this case, we would recover basically within this year, and 2021 will be a normal year. We can have a U-shaped scenario where the recovery takes longer. So this crisis would affect almost all 2020. Recovery could start by the end of the year, but it would go through 2021, 2022, and 2023. And the previous levels of GDP and economic activity could be seen maybe 2023 or 2024 in most of the countries. Or we can have an L-shaped scenario. This is the worst one, the most pessimistic one, where the effects basically become permanent. So everything that we lose now would not be recovered never or at the very long term. We can also have combinations of all these scenarios. We can have a W scenario where we have an initial instant recovery, but then in the next season we have the pandemic again, and the economy drops again. There are you can imagine as much combinations as you want. What are saying right now the main economic agencies about possible recovery scenarios? So basically, this is I sorted them in date, so you can see that at the beginning of the crisis in mid-March, what we were seeing in this case for Italy, but we will see exactly the same in all the countries, we were seeing, or agencies were forecasting basically a V-shaped scenario. So a drop in 2020 and a full recovery in 2021. As time passes, what they are saying right now is more a U-shaped scenario. So a huge drop in 2020, in this year, and a slight recovery in 2021. So recovery will take at least several years. We can see exactly the same in Spain, with a similar decrease in the GDP than in Italy, and a recovery in 2021 that will not even halfway of where we were before the crisis. We see the same in in France and the same in Germany, with different levels of of drop in the GDP, but basically the same U-shape scenario of recovery, and the same in the United Kingdom. So with all these scenarios, what is AleaSoft using in their GDP scenarios? Basically, we are using a white U scenario. So a huge drop in the GDP in 2020, starting in starting in Q2. And then we start seeing the first positive values of GDP growth in 2021. And the levels of GDP seen before the crisis will not be reached, at least in 2023, in most of the countries. So this is because we are having right now a public health crisis in Spain and Italy, that are the first countries that with severe impact on this pandemic. We are starting to see the light at the end of the tunnel. We see the end of this health crisis to be within this second quarter, but then we have the recovery of the economic crisis, that this is the one that will take much longer. Also because there are other important economies in the world, like the United States, that is facing right now an important impact of the pandemic. So the recovery in the United States, we don't know exactly how well it will go. So United States recovery will impact and will guide the recovery of the global economy. That will also obviously impact the economy of the European countries. Also, we have all the countries in Latin America that we don't know exactly how the recovery there will go. For the Brent oil prices, the future markets during last weeks are telling us that the equilibrium price that will be reached once this crisis is recovered is around 50 euros per barrel, $50 per barrel. And the forecast that the agencies are giving us these days tells us that by 2021 we will reach around between 45 and 35, let's say around $40 at least for 2021. But as I said, the price of the oil is dominated by the supply. So depending on how the producing countries agree to maintain or to decrease the production, the price will recover faster or slower. In the gas, in the gas prices, the future markets are telling us that the equilibrium price is around 15 euros, very similar for the British gas. And the electricity futures, if you remember, the behavior that we saw in the prices of CO2 emission rights, and this is exactly what we are seeing in electricity future prices. We we saw an important drop in mid March, just when the European crisis started, but we are seeing a recovery, and right now, for the futures of 2021, we are already seeing, in most of the countries, we are already seeing similar levels before this drop. So what are the scenarios that AleaSoft is seeing for the for the electricity market prices? As we already said, electricity prices are barely conditioned by the prices of oil and mainly by gas. So when the geopolitical situations in the in the oil markets are solved, prices will recover, and then electricity prices will basically follow the same path of recovery. Also, it is important to know that right now, what our models are seeing is that the electricity prices are very low with respect to the equilibrium point. I'll talk later about this equilibrium point. It is what our models try to find. And then see, depending on how far you are from the equilibrium point, you have more or less probability of the price going on that direction. We are right now much lower than the equilibrium price, then obviously there is a lot more probability of prices going up than going down. Also because basically there is no more room for prices going down. So the probabilities are prices will recover, and will recover more or less soon. And these are all the information and all the scenarios that we are putting in our models, and this is the outcomes that are going to the our mid and long-term reports that we have just updated at the beginning of this quarter. Let's see the impact of this crisis on the renewable energy projects. Obviously, if we are in a situation where the most or the non-essential economic activity is basically stopped, obviously, if you are building a renewable power plant, this plant is going to suffer delays, and this is the obvious consequence of having restricted movements, of having a general lockdown, and having basically a stopped economic activity. So the obvious consequence is all new projects will have delays in when starting. Also because to build a plant you need supplies, and obviously supplies are also affected for the restriction of movements, and the paralyzation, the stop of the non-essential economic activity. On this sense, we have to say that Spain right now is leaving the more strict lockdown, and construction projects are now allowed to keep working. So as I said, in Spain and Italy, we are start seeing the end of this more strict crisis, and now we have to see how the economic recovery starts. So about that one was about the construction of new projects. What about the viability of the current projects? Obviously, the current situation of low prices puts a lot of uncertainty on the viability of new projects. But what we have to say is, if the viability project was done before the crisis and the project was found feasible and viable, the current situation should not be a problem. So looking at the long term, if the project was viable before, it should be viable still right now, because we are looking at the long term, and we see that at some point, sooner than later, the prices will recover. Another thing is, if you are trying to to measure, to quantify the feasibility right now of a new project. Obviously, right now we are facing a lot of uncertainty, so obviously it's difficult right now to see what can be the viability of a new project. This is well, this also is important because right now it is clear that there are periods of low prices. This is maybe difficult to see, or more difficult to understand when we are in periods of high prices. But it's important to see that there, as we have seen in the history of the prices of all the markets, there have always been periods of low prices, and there have always been periods of high prices, because electricity prices are influenced by a lot of factors, and all these factors produce variability in the prices. So in the future, there will be more periods of lower prices, and there will also be a lot of periods with higher prices. So well, it's a good opportunity to see that there can be difficult times, but at the long term, it's important always to look at the long term. At the long term, the equilibrium point around which the electricity market prices will fluctuate around, the equilibrium point will keep the prices at let's say at the right place, not too low and not too high. So buyer and sellers of electricity can have viable plans. So, well, as I was saying, the message that we want to send is kind of an optimistic message. If a project was viable before the crisis, it should be viable still right now, even if on this uncertainty, on all this uncertainty that we are seeing. The key is to have a clear vision of the future of the market, having a good price forecast and a good strategy for manage this risk, because this risk of higher prices and lower prices will be there for will be there in the future also. So it's important to have a good strategy based on good forecast of the future of the electricity market. For the financing of the projects that are being developed right now, some projects are financed through PPA contracts. Right now, the prices of PPA contracts are lower due to all this situation of crisis, but well, obviously this is a disadvantage for the developers and investors in renewable energy projects, because they will get lower prices. But it's also an opportunity if you are buying energy. We are thinking big consumers, electro-intensive industry. They now have an opportunity to sign a contract with advantageous conditions. For projects, for merchant projects that sell all their energy directly to the market, now it's a difficult time. Because right now they are seeing low prices, so they will need more time to get the return of their investment. But as we said, at the long term, both kinds of projects should be viable. About the energy and climate plans that all the European countries have, obviously all these plans has targets on new renewable energy capacity. As we said, there will be a delay in in the construction of new capacity. So obviously these targets will get more difficult to to reach. So maybe all these plans should be revised, modified accordingly to the new scenarios. Also, if we are seeing less electricity demand, we will need to take more seriously the storage of this electricity and storing it in larger quantities. Maybe one option is producing hydrogen. For the self-consumption setups, right now, with lower electricity market prices, they are seen as less attractive. If I have to invest money to produce my own electricity, but on the other hand, I can buy it directly to the market with cheaper prices, it's less attractive. Also, if I already have my my self-consumption setup, right now I will need more time to recover the initial investment. But anyway, as the self-consumption is an important player in the decarbonization plans in all the European countries, and because market prices will increase at some moment, we are seeing that the previous rates of growth seen before, seen in the latest month, they will be recovered at some point. So photovoltaic self-consumption will keep increasing in the future for sure. If we try to see now more at the long term, we have already talked a lot about the long term, but let's try to be a little or more visionary about the future. As I said, what we have to understand is that the current situation is extremely exceptional. We are seeing extremely low values of electricity demand, but it's due to the public health crisis that we are having right now in the current situation of lockdown and the stop of the economic activity. This situation creates a lot of uncertainty about the future, mainly about the short term, maybe a little about the midterm, but it should not be a problem for the long-term vision. As we have seen and we have already repeated several times, electricity markets are mainly driven by the gas prices. So the current situation of very low electricity prices that are seeing right now is mainly due to the situation of the gas market, more than the drop in the demand that we have seen, that it is very important, but has a limited impact on the on the price of the electricity market. So why we are talking about the equilibrium point or the equilibrium price when we are talking about the the very long term? The equilibrium point, the equilibrium price of a market is the one that makes the market work. If we have too low prices during too long time, then the investment in new capacity decreases, the demand increases because everybody wants to buy a new electric car because electricity is too cheap. Then demand increases, the supply decreases because there is no investment in new capacity, and prices rise again. If we have too high prices during too long, then everybody wants to invest because they can sell electricity at high prices. Then we have a lot of supply, but then the demand decreases because nobody wants to buy an electric car because it's cheaper to fill it with fuel. And then more supply and less demand, prices go down again. So it's we have to understand that there is an equilibrium price that makes the market work, and obviously prices will fluctuate around this point. So we can have periods of low prices, periods of high prices, but the equilibrium point is kept. It can move at the long term, obviously, but it can move less than the prices can fluctuate around them. Here I listed some of the most important variables that we are using in our models, that are all the variables that make the price fluctuate, and the variables that define this equilibrium point at the long term. And I'll show you a forecast, a long-term forecast that we did in November 2010 that illustrates very well how this equilibrium point works. So you can see that we have a central forecast in light blue, and then we have two bands in green, up and down. And what we see is that the registered prices basically follow the trend of our central forecast. Basically follow the trend, but it fluctuated around it. So if the prices get too low, at some point they rebound and get again to the equilibrium point. If prices went too high, then they sharply drop at the equilibrium point. And this confidence band basically tells us what's the probability of the price fluctuating upper, the higher band, or lower than the lower band. So as I said, there will be higher prices in the future, as there have been in the past. There will be lower prices in the future, as we are having right now. But at some point, the farther we are from the equilibrium point, the quicker we will get back to the equilibrium point. And as you can see at the end of the graph, right now we are also out of the lower band, and we are quite far from the equilibrium point. So there is a lot of probability. The larger probability is of the price going up, and going up more or less quite quickly. This is the electricity demand forecast that we are having right now for Spain in this case. But it's the forecast from last week, so maybe it's already a little outdated. We are doing right now an updated version of this forecast. And what we are seeing right now is that at least the drop in demand in the second quarter will be at least of 6.3%. 6.3%, being in the crisis that we are, could be seen as well, not such a huge drop. But if we remember the numbers that we see in the crisis of 2008, the decrease in the demand was around 5% most of the countries. So more than 6% in the electricity demand it's a huge drop. So it's as I said, the current situation is quite exceptional. So it may look small, but it's a huge drop. And talking about the opportunity that there exists in every crisis, in a situation of low prices of electricity, right, like we are right now, it's obviously, as we already said, it's opportunity for energy consumers. when we think about big consumers, electro-intensive electro-intensive industry that are consuming a lot of energy, and most of their costs are due to the consumption of energy. A situation like the one we are living right now, it's a good opportunity to get good conditions on new contracts or on new energy purchases. So, but to be able to get advantage of these opportunities, what you need to have is a good strategy. Good strategy to get energy in the at every horizon in the best conditions, and also a good strategy that has the base on a reliable and scientific and robust long-term price forecasting. So if you have a good strategy and you have a good price forecast, you can take, you can cover your risk, so you can protect against higher prices in this case, and you can have the opportunity to take advantage of low prices like the current situation that we are living right now. A basic, the most basic strategy that you can have when you are trying to buy energy is diversification. So take, let's say, 1/3 of your energy consumption and put it at the long term with PPA contracts or bilateral contracts at the long term. Get another third of your energy and buy year, quarterly, and month products in the future market when you have the opportunity to get good conditions, and have another part reserved at the short term to buy short-term products in the electricity markets or buy directly to the daily market. And also have a kind of reservoir, could be 10% of your energy, to take advantages of extreme situations like the one that we are that we are having right now. So with this very simple strategy and a good forecast of and a good vision of the future electricity market, you can cover your risk in disadvantageous situations and take the opportunities that the advantageous situations like the present one are giving you. So I am getting to the end. Just try to recover the main ideas that we have been talking about. We are in the middle of a public health crisis, but in the European countries, at least, we are seeing that the end of this crisis. What we have to focus now or afterwards is in the economic crisis that will follow due to the stop in the economic activity that we have suffered in these last weeks, and also because the pandemic is still important in important economies like the United States and or the Latin American countries. Also, we have seen how oil and gas prices are registering also low prices, but as we said, this low price situation is mainly driven due to the non-deal, non-agreement in the producers, in the producing countries. Once this agreement is reached, and it has been reached at the beginning of this week, and once the midterm situation, let's say, is a little clearer, the prices will recover and they will go up again. For the electricity demand, we have seen that the main driver for the low price current situation are the low prices of gas of the gas market. So once the gas price recover and the electricity demand starts recovering, electricity gas prices will recover. Electricity, in the case of electricity demand, we are seeing how the current levels are historical minimums, but these are basically due to the measures and the actions that have been taken by the governments. So once this public health crisis is over, electricity demand will recover. we've seen the impact on renewable projects. On the one hand, we have the delay that will suffer the construction of new of new renewable capacity, and on the other hand, we see how there is higher uncertainty in the viability of the project right now. But the message that we want to say is that if the projects were viable before the crisis, at the long term, they are still viable. And as we mentioned now in the last slides, situations like this one can be an opportunity for if you are consuming an energy. All you have to have is a good buying strategy supported by a good forecast and a good vision of the electricity market price at the long term. And let me finish inviting you to the second part of this webinar. It will be held on May 21st, and we will have updated data on what on the electricity and commodity markets, and also in the forecast. And we will focus this time. We will focus in the financing of renewable energy projects. So, Alejandro, back to you.
Thank you very much, Oriol. We will answer your question now. Please have a few moments to prepare the questions, and we will be right back.
Well, Alejandro, if I may, there is a question about if the current situation and the future situation will lead an increase or decrease in the use of renewable energies. Well, there is an obvious situation. Most of renewable energy sources are non-dispatchable, so basically they produce everything that they can. In a situation with lower electricity demand, the the technologies that can reduce or decrease its production are mainly the thermal technologies. So one of the consequences, at least while the electricity demand is at lower levels, is that we should see an increase of the quota of the of the renewables in the energy mix.
Thank you, Oriol. One of the questions we have got is how current price situation is affecting PPA market in subsidy-free projects. Okay, as Oriol mentioned, the PPA prices have been affected in this crisis, as with the future prices. But this is an opportunity, and take into account that they will start recovering, we expect, in the near future.
Alejandro, if I may, there are there's a question about the price of the price of the gas market right now in a situation with where we have a lot of supply and we have a lot of reserve stored of gas. Obviously, the decrease in the gas, in the energy demand, oil and gas demand, and the existing large reserves of gas is what is pushing the prices down. But as in the case of the oil, gas prices, we are having quite transparent markets in gas, but still it is a price that is kind of controlled by the supply, and it is the supply is controlled by the producing countries, and geopolitical situations have a huge impact. So if oil prices start recovering at some point, gas prices will do more or less the same sooner or later. So maybe the recovery will not be as fast as in the oil price, but we are seeing a recovery in the gas that will lead also to higher electricity market prices. There is an interesting question about the production of hydrogen in order to store energy. Do you expect more willingness to invest in hydrogen storage due to the specific this pandemic situation? We even before the crisis, we think that hydrogen, the production of hydrogen, in order to consume a lot of renewable energy that maybe can can surpass the total demand of electricity. You can use hydrogen to store energy and then convert it back to electricity in a fuel cell, but you can also use it to fuel transportation, for instance, for let's say small or utility cars. It looks like electric battery technology is the one that will that will dominate. But when we are talking about heavy transportation or long distances transportation, we are seeing hydrogen at the best solution, and it will be a green hydrogen if it is produced with renewable energy sources. So even before the crisis, we were seeing hydrogen as a very good solution for energy storage, and in order to consume all this new renewable energy that will be produced. And in situations like the current one, where we are seeing that we will need more storage, we are seeing hydrogen production as a very good solution, and we expect that the interest will increase to this technology.
Thank you, Oriol. One participant asked if there is a high correlation between electricity prices and gas prices in Europe, and as Oriol showed in the webinar, the shape of the lower prices for gas in Europe, of course, has high correlation with the shape of the market prices since September 2018. So yes, there is high correlation. Okay, perfect. And that concludes the webinar today. We will answer the remaining questions directly by email. And thank you again, Oriol, for the presentation, and the audience for joining. Have a nice day and take care.
Thank you. Goodbye.